What's up, everyone? All right, here we are. It's Friday morning, and in today's episode, I'm going to break down my trades from the day. I'm sitting here wearing green and wearing my Green Day t-shirt, so it shouldn't surprise you that I'm sitting in the green here this morning, which is great. Now, when it comes to the small account today, I didn't take any trades. There was nothing that I liked enough to pull the trigger on. I was close on one setup, which I'll go over. I'll go over that one first, but I ended up trading it ultimately because I wasn't sure that it had enough upside potential to justify the risk. And so it was the right move to sit on the sidelines. Now, as it turned out, it did end up making the move up that I was looking for, but nonetheless, it was better to be safe than sorry, especially at the end of the week. You know, one of the things for me is kind of maintaining the headspace, the sort of mindset of confidence. And it's easier to do that when you finish the week in the green. It's easier to do that when you finish the day on a green trade. And so today, after having a good week in the small account challenge, I didn't see anything that I was quite confident enough in. So the stock that I was considering was IVDA. The best thing that it has going for it is, if you say it quick, Nvidia, it almost sounds like Nvidia, but it is not. So this stock, it's a penny stock, cheaper. And as it squeezed up here to $1 a share, I was very tempted to break the ice. So I got my order ready and I thought, okay, well, with a $2,800 account, I could buy 2,800 shares of this. If it goes up 10 cents a share, I'm up $280. That's my 10% growth of the account in one day. So that's what I needed, a 10-cent winner. And, it happened. As you can see, it did go right up to $1.10. But that would have been getting the perfect entry and the perfect exit. And I wouldn't have gotten that because you never do. So realistically, maybe I would have gotten half of that, 5 cents. So could have been a $130 day, which in hindsight would have been better than zero. But at that moment, I thought, what if there's a better opportunity that comes along? If there's a better opportunity that comes along, then I'm going to regret having blown my one trade of the day on, something that only had the potential to go up 5 or 10 cents. So I waited, nothing better came along, and now I can't go back and take that trade because the time has passed. That's not the way it works. So it is what it is. All right, so no trades in the small account today, but I was able to break the ice with one trade in my main account. So in my main account, we had SMX, which popped up on the scans. Now this one, I'm going to get zoomed in here. This is a stock that I have traded before, and it was kind of interesting. We had this initial pop right here at about 7:16 a.m. There was news out on it. We'll have to go back a little ways. It's a stock that has a very low float. In fact, someone said, Ross, this stock is crazy. So you're telling me at one point it was trading at $60,000 a share? Or wait, you scroll back even further. Holy smokes. This stock at one point was trading at 5, 16, $20 million a share? How does that even work? Okay, wait a second. This chart's still going. So you're telling me there was a day where one share of this stock cost $552 million. What would the level 2 have even looked like? So 551 million by 552 million, a $1 million spread? Okay, so the way this works, this is a stock that has had a number of reverse splits, as you could see down here on the chart. Reverse split, reverse split, reverse split. So this one up here that shows the high of 500 million. Well, the first split here was 22 to 1. So divide the 550 million by 22. So divide by 10 is 55 million. So divide by 20, let's say 20 million. So when you factor in that reverse split, the actual high wasn't 555 million. It was more like 20 million. All right, well, that's not as bad. It's still crazy. Then, oh, wait, there was another 75 to 1 split here. So then you've got to divide 20 million by 75. And then there was another one here. So that number you divide by 28. And then that number you divide by 4. Then that number you divide by 7. Then that number you divide by 10. Then that number you divide by 8. And so what ends up happening is that you realize the stock never traded probably at very much more than $10 or $15 a share, in fact. But it looks that way because what they do with these reverse splits is they essentially allow the stock to not go to zero. It can't go to zero because they basically make the floor lower. And so in this case, the stock, just keeps selling off more and more and more. Now, stocks like this, every time they do the reverse split, the float goes down. Stocks like this, however, are obviously liquidating. They're just selling, selling, selling. They're just cashing out typically. And so it's hard to trust them, obviously, goes without saying. But what we do know is that these stocks, when they have a float of 700,000 shares, if they do have a surge in demand, they can make a pretty big move. And so although it's not super typical that, these will end up ever getting back to their highs, they can get a little bounce off the low. And this one did get a little bounce off the low today. So I've got $930.22 of profit on it. That's not a lot, but you know what I did today is I traded with smaller share size. I was red on Wednesday in my big account. I was red on Thursday in my big account. Today, did I make back all those losses? Nope, I didn't. I'm going to be red on the week. But you know what? I'm not down that much on the week. 6,000 on Wednesday, 6,000 on Thursday, then 900 today. So, it's a red week. I'm bummed out about that. I'd rather be green, but also let's face it. The market this last week, the last couple of weeks has been a little choppy. Now it was 2 weeks ago. It'll be 2 weeks ago on Monday that I had a really solid day, $65,000. That was on Monday. Let's see, we'll put up the calendar here. So November 10th. All right, so that was last Monday. But then Tuesday was a little slower, Wednesday was a little slower, Thursday was a little slower, and Friday was a no trade day. And then Monday was a no trade day. Tuesday was a no trade day. And I haven't imported my trades yet from Tuesday and Wednesday. I could do that while we are doing this session. I'll just pull them up over on Lightspeed. So basically, things have kind of petered out here a little bit. And, what's the deal with that? Well, there's a couple things that are going on. One, many of you guys know that this year, some of the biggest moves that we've had have been based on stocks that had a headline of doing a crypto treasury strategy. So what does that mean? Well, actually, it's funny. We have a stock today that has that headline, MFI. They have a private placement for $500 million. What are they going to do with $500 million? They're going to buy cryptocurrencies. That's what they're going to do. And they're going to park them on their balance sheet. So basically what they got was a loan from a group of institutional investors who said, here's $500 million. We now are going to own $500 million worth of your company. But we're requiring that you put that full $500 million into these cryptocurrencies. And so now the company is going to basically just have those cryptocurrencies sitting on their balance sheet. Now, if they go up in value, it's obviously good for the institutional investor that, encourage them to take the position. If they go down in value, then they're bad for them, for the investor, and they're also bad for the company. So, what's going on with crypto right now? The overall crypto market, the Bitcoin is down, right? So Bitcoin is pulling back a little bit. There was speculation that the Federal Reserve would cut interest rates again in December. And the more they cut interest rates, the more investors, even just everyday investors, like maybe myself and others, have to seek higher risk, what you would consider higher risk assets in order to achieve good return on their investment. So right now, you get a good return just by investing, honestly, in bonds. I mean, inflation's been high, but nonetheless, you get a pretty good return and it's guaranteed. Bonds are guaranteed return. That's the way they work. Unless the underlying, what you're investing in goes bankrupt, which when you're talking about, state bonds and federal bonds, that's not something that people have historically worried about. So given that, people are less inclined to go into equities. So the equities market suffered when the bond markets went up, because as bonds increase in value, they're paying a better dividend or a better return. People are more likely to put their money into it. So with interest rates going down, the bonds won't return as much money, which forces people back into equities or back into cryptocurrency. So now all of a sudden, that December rate cut potentially is canceled because of the Friday or the Thursday job numbers that came out that were better than expected. So now Bitcoin's not happy about that. So people are, so that's now people are sort of, changing their positioning. And to the extent that that affects us as small cap traders is really just that you've got probably over 100 small cap companies that have taken on crypto treasury strategies just in the last 6 months. And so, that headline was working well when crypto was at all-time highs, but now that crypto has pulled back a bit, that headline's not really working. Now I see MFI going higher, but it kind of, it's got such light volume. It's got 363,000 shares of volume right now. Now, 6 months ago, or in July even, this stock probably would have been at $50 a share. So one reason that the markets feel a little slower right now is because, and this is my P&L here for the last 90 days, kind of a little rocky because I had that loss back there. But one of the reasons it feels a little bit smaller right now, or a little bit slower right now, is in part because we're not having those crypto catalysts. So those catalysts were giving us a lot of opportunities, and right now they're falling on deaf ears. It's not really working. And that was true at other periods of the time other periods in the year, but it's definitely the case right now. So without that catalyst, which has given us a lot more opportunities than we probably expected we would get this year, what else do we have to work with? Well, we've got the tried and true biotech stocks, and then we have stocks like some of these Chinese stocks, LUD, which, are risky. You've got to take them with a grain of salt. But yesterday, this one made a big move. So, but not a lot of liquidity on that, very light volume. MNDR, this is a Singapore company, so, it's healthcare. So, there's some things that we can kind of break the ice on, and some of these might end up working. But what I'm kind of thinking is that, SMX, unfortunately, this one, wasn't able to hold up and it ended up pulling back. But you don't want to underestimate a stock that has a float of 700,000 shares. These can do some pretty crazy things. And so during my Q&A sessions that I've hosted this week from students at Warrior Trading and our Warrior Pro Mentor sessions, some people have talked about, well, should I be shorting more in this market? And I've said, look, do what works for you. Do what you feel comfortable with. We know that shorting carries risk because once you sell something, you have to buy it back. So if the price goes higher, you're going to buy it back at a higher price. And if suddenly you have one of those stocks where the price goes like GLTO from $6 to $28 a share in one day, and you fumbled and didn't cover, or it doesn't matter what happened. You lost your internet connection. Your phone was out. You couldn't get reconnected. You come back, it's at $30 a share, and you're down 300 grand on 10,000 shares, right? You've gotten smoked. Your account's gone. It's zero. It's not just zero. You owe money to your broker. So that's the risk. But the risk is definitely amplified when you trade stocks that have very low floats, because these very low float stocks they don't always, but they can do some pretty crazy things. Your risk is also amplified when you trade during regular market hours, because you can get caught in halts. And you can have a stock halt, and when it's halted, you cannot get out. There's nothing you can do. And then when it resumes, so MFI right now, this one, this is halted. So we pull this up. So MFI, it's halted. It's showing a 1650 resumption. And there's nothing you could do. You want to get out 1610, your stop is 1610, doesn't matter. It's opening above that level. So, this is just the reality. And if you are really good about, now it's showing $17.17. Like I said, there's nothing you can do. You're just at the whim. What if it showed $32? What if it showed $50? That's crazy. It would never. I've seen it happen before. I've seen a stock halt up at $15 a share and resume at 150. It doesn't make sense, but the market's irrational, and traders can get smoked and they get a margin call. What ends up happening in this case here is that with this stock halted up, your P&L, if you're in it, will change based on the resumption price. So if you're short and then suddenly it starts showing a resumption price of 16 or 17 or whatever, if you're showing that you're down big. So now your broker might be like, wait a second, we've got a problem here. We've got a client who's down big. We're going to have to take over their account and get out of it. So how do they do that? Well, they go place the buy order. You place a buy order for this. If I placed a buy order right now at 1650, then that goes in the line. So now the market says, oh, here's another person buying. If I put the buy order at 1675, then unless there's a seller at 1660 or 1655, right? They're constantly trying to match. That's why the price is moving while it's halted, because they're trying to match all the open buy orders and all the open sell orders, and then it'll resume. But if the broker took over your account and tried to, buy like a big position, if you were short 20,000 shares, then it's going to affect the resumption, right? And it's going to make it worse for you. So that's a risk with trading during regular hours. These on the short side is that you can get caught in halts. So, anyways, do as you'd like, manage your risk. For me, this account right here is a Roth IRA. I have no income tax on any of the profit in this account. I'm up over $6 million on the year, and there's no income tax on that. That's phenomenal. If a short seller made $6 million, they'd have, depending on the state they live in, if they made $6 million and they lived in New York City, they'd have $3 million of tax. Half. So I make twice as much because I'm more tax efficient by not short selling. Now that's interesting. So, that's something to think about a little bit. So it's no surprise that my focus is not going to be on trying to become a better short seller because of the tax issue. It's just that's the problem when you start trading with this amount of money. All right. So anyways, today, small green day, were there opportunities to short some stocks? Maybe. Is there going to be something that starts to become more obvious as the day goes on? Maybe. A stock like this, Fox, gapping up, halting with no news. But why? It's got no volume, 13,000 shares. It's the illusion of momentum at this point. I mean, that's not even real momentum. There's no volume. So this is the time to be patient. I know every day we want to come in here, we want to trade, but what's more important than punching the keys every day is preserving your account, managing risk. And so today I was a risk manager and I took a little bit of risk, but not a lot. I traded with smaller position size. I made a little bit of money. I'm finishing the day in the green. Look, $900, that's great. That's solid. And if we have one day next week, just one day where we have a stock that opens up and I can make $30,000, $40,000, $50,000 on it, then, it's like, that's what I just have to be here for, right? Those are the days that count. Today doesn't matter. Yesterday doesn't matter. Small red days, small green days, but it's showing up every single day. So when we get that stock that opens up, I'm here and I'm ready to capitalize on it. So I'll be back at it bright and early on Monday morning, 7 a.m. And so I look forward to seeing you guys there. I will upload a watch list on Sunday. And those of you guys that want to spend some time studying over the weekend, if you join the 2-week trial, it's 14 days. So you'll still have 10 days of access in the chat room to watch me trading. But you can actually be studying this weekend, studying the material and learning more about my strategy, how the market moves, watching the classes and just immersing yourself in all of this education. There's so much to learn, and learning in a cold market is kind of a great thing because you're not really missing a lot. I mean, you're learning, you're gaining experience, but you're not missing huge opportunities and getting a ton of FOMO. So study up, because when the market heats back up, you want to make sure you're able to capitalize on it. All right, so with that, I'll remind you, trading is risky. My results aren't typical, so manage your risk by practicing in a simulator before putting real money on the line. And trading, there's no guarantees. Whether you learn from me or you trade on your own, there's just no guarantees. So take it slow. All right, now if you want to check out a couple more episodes I've got here on YouTube, I'll put links to them right there. And I hope you enjoy it, and I'll see you bright and early on Monday morning.